Good afternoon, ladies and gentlemen. This is Josh Horton here with Pinnacle Financial Services. And as always, we really thank you guys for taking some time out of your busy schedules to be with us. We're very excited today for our webinar discussion, which we have joined with us today on the call, Lincoln Financial. Our Regional Marketing Director, Tim Lockwood, is with us. If you haven't spoken to me in the past, you see my direct extension up there, 7707. I'm the sales director on our life, annuity, long-term care department. So anything regarding those product lines, feel free to call me. If you're already with us, forgive me with the brief overview. But if you haven't worked with Pinnacle in the past, we're a direct brokerage firm, independent IMO, FMO, if you will. Those are just really kind of industry jargon and in terms that the insurance carriers refer to us as. But really, we're a partner with our producers, with our insurance agents, financial advisors, and I really like to describe us as an extension of your staff or your back office. So if you're working with us on a life case, long-term care, an annuity case, we will work with you from start to finish, from case design, running illustrations, helping to pick the right product for your client, to helping with the application process, submitting business, scrubbing of the applications, the whole thing. So even when cases are pending, if there's underwriting involved, if it's an annuity or for a MoneyGuard case, if there's a 1035 exchange involved, my team is in the mix there and working on your behalf to really make sure your business gets processed smoothly and we get you out there in the field to see more clients. That's kind of the end goal there. So just one more important note before we really kind of dig in and I pass things off to Tim. Any contracts that you work on with Pinnacle Financial, any companies that you partner with us with, those are direct contracts. So you're paid directly by Lincoln Financial, and we have a really awesome contract with Lincoln. So we've just been working with them for such a long time. We have a sort of a grandfathered contract, and we're able to trickle some of that down to our agents. So we're offering a 1% commission bonus on the Lincoln MoneyGuard product to any of you agents on the call out there today. So as we go through our discussion, if you have any prospects that come to mind, any existing clients, definitely jot their names down, bring that info to us. We'll help you work the case and talk to you a little bit more about that bonus and how that all works. Your phones are on mute, I should also add. So if you have any questions at all, don't hesitate to type those questions in on the question box there, and we'll make sure to get to answer all of your questions probably by the end of the call. And so just one note without further ado, I pass it off to Tim about Long-Term Care Awareness Month. As you are now obviously well aware, November is many things. Thanksgiving, you think about football, getting together with family, but it's also Long-Term Care Awareness Month. So a great time to bring awareness to this huge risk that's out there that a lot of Americans have not insured against. So just a couple stats. 70% of men and women over the age of 65 will need long-term care services. And these are just stats from a couple different sources. We did a blog recently on this topic. So if anybody wants the article, we can send that to you as well. 78% of adults who are getting long-term care at home rely solely on family and friends for their assistance. So really what we find is a lot of people don't have long-term care or a hybrid type plan like the MoneyGuard product that we'll discuss. And essentially their family is kind of footing the bill. So over 90% of these family caregivers had to actually alter their work schedule permanently due to caring for a loved one or had to relocate or change jobs. So just, it's a huge impact on the family and a very big opportunity for us as insurance agents and financial advisors to be protecting that risk for our clients. And what better way to do it than with the MoneyGuard product? I'll kind of pass it to you, Tim, with that said, and you can kind of tell everybody what we're going to go over today on the MoneyGuard.
All right, great. Thank you so much, Josh. I will take that handoff from you when you're ready, but certainly appreciate the opportunity here to partner with Pinnacle. You're in great hands. And November is Long-Term Care Awareness Month, but I will tell you and ask you, this is something that you really need to engage with your clients on a regular basis, because the opportunity has really tremendously grown significantly. And that really comes down to not only the evolution and the solutions that are made available to you as an agent, but the guarantees and how the products and the solutions have evolved over the years. And really what I want to get into today is really focus on the long-term care conversation and really give you some ideas to help implement the extended healthcare conversation into your practice. Because as I generally ask my advisors that I work with through my valued general agency partners is, well, can we go out and find 1 to 2 couples a quarter? If we go out and find 1 to 2 couples a quarter, that adds up to a significant amount of revenue. There's multiple ways to fund these contracts, and you're really engaging your clients on a consistent basis where this could be a consistent part of your business that can generate nice revenue, but it's also the right thing for your clients. And the reality is they need it. They need it. We can talk about statistics all day long, but if you engage your clients around what their story is, and if they've had a family member or an LTC event impact a loved one, you're going to hear stories. And I hear them every day of the week. So the question that I have for everybody on the phone is, are you getting to your client's story? So I want to share some case studies and really lead off with talking a little bit about the conversation. But before I do that, I really do want to level set with what we're doing with MoneyGuard. And currently in most states within the country, we have MoneyGuard 3. We recently launched it. And what this is a really simple strategy. We have historically been known for our 3 buckets. You're either going to live and live a long life and potentially need some level of care. And in that event, we're providing your clients leverage on their dollar for the long-term care. That's your first big piggy bank here, or your first big bucket of your dollars. Generally speaking, we are going to leverage and or create buying power at a pace of about 4 to 5 to 1. For younger clients, it could be as much as 8 to 10 to 1 leverage on the dollar. So the question is why would you ever want to pay full, right? Now, the second bucket here is, you know what? You might live a long, healthy life and then pass away in your sleep. That's the best case scenario. You might actually get into an accident and pass away early for some reason. The bottom line is the assets that are plugged into MoneyGuard, whether they're repositioned or repurposed over a flexible schedule, we're going to pass those assets on to the beneficiaries via a tax-free benefit. And then lastly, we allow your clients to maintain control over their premium. So there are actually return of premium options. Now, this bucket is really just a warm and fuzzy for the kitchen table and to put us more in a position as an asset class within the portfolio. The reality is nobody quits and walks away from these policies. So the ideal plan design when we run the illustrations is really to maximize the long-term care. I'm going to get in a little bit to that, but it's important to note our long-term care and our death benefit are fully guaranteed. So Lincoln cannot increase the premiums or decrease the pricing. Believe it or not, as far as Lincoln and other carriers educating the marketplace on these solutions, I still get that question. Wait a second, these are guaranteed premiums? You can't decrease the benefits down the line? Absolutely not. So it's really an educational gap with the client who might be researching what is out there as far as traditional long-term care, which may still be a good fit, but is not guaranteed, right? So I'm going to kind of come back to this. I want to end my slideshow, and I want to share a tool that we were using on a regular basis earlier in the year. Now, this piece is client approved, and this is what, I reference to as our conversation starter. Now, this is client approved for you to use, whether you use it at the table for your client meetings or potentially send it to your clients in advance. maybe you close a meeting with it and it sets up your next meeting. But what this document does is it helps tee up the conversation. And what you're not going to find in here is you're not going to find anything about product, right? And what this really does is this kind of hits our key myths that we try to address in the marketplace. Lincoln has done a lot of our own research, partnering with some research firms to really kind of uncover and what, as this document says, know the facts. Because the four myths of, it won't happen to me, or Medicare, Medicaid, will have me covered. This is just a way for you to, communicate in advance to your clients regarding, making educated decisions around the planning opportunities regarding that extended health care down the line. And Josh threw out some stats to start, but you got to understand, going back to my point about, somebody in their family has. Well, when you look at these, Americans believe the risk is greater for somebody else in the family. Well, why do they believe that? They believe that because they see it within their family tree. As you can see, half the people out there that were surveyed think that their parents will need some sort of care. So if that's the case, why wouldn't they look in the mirror and say, between me and my spouse, it might, be something that we should plan ahead of, right? And plan ahead for. And, for some of the folks on this phone who do Medicare planning, I know right now is a very busy time of the year, but we all know that Medicare does not cover long-term custodial care. If there's a 3-day hospital stay and it's medically necessary and we're transitioned to a facility, we may cover up to about 100 days, but copays kick in. And the reality is 100 days is not long-term. So for all your clients out there that might think the government is going to take care of them, they might need to double check, where their assets are and what their income levels are, because really the only way that the government is going to pick up this tab for them is via the Medicaid program. And now I know there's some waiver programs in different states, but for the most part, you got to spend down all your assets and you're really limited on where that care is going to be received. Medicaid generally provides care in a facility. So they really limit the opportunity to stay in the home. So again, this document really allows us to get ahead of some of these common misconceptions of what's going out there. So if you can get this in your client's hands up front, could be a good opportunity to get a leg up on the overall conversation specific to a solution. So then you have your higher net worth clients, right? Your higher net worth clients have built up a nice portfolio. They could come back to you and say, well, you know what? That's what my savings are for, right? But folks don't understand, and underestimate the cost. And I just want to refresh something here just so I don't lose my case study. But, what happens is folks end up spending their assets down a lot quicker than they anticipated, right? And then lastly, we can send this out for you to read in detail. But lastly, my family will take care of me. And I'm never going to argue that point. Absolutely, your family is going to step up and take care of you. But do they understand what that means? Do they understand what assisting with daily activities really means? Can they lift you? Can they help you out of bed? Do they understand that they might have to help you in the bathroom? So there's a lot of challenges there on how that can really play out. And the reality is we want to put family members in the position to be care managers, not caretakers. Because the reality is when the family becomes the caretaker, they're losing out on hourly wages. They're not working. They're actually becoming chronically ill themselves. So it is a really challenging situation. And as I've referenced on other calls I've done this past month and meetings that I've done, this is really an emotional decision. We can certainly reference statistics, and that might move the needle with some people, but we got to understand how this emotionally impacts your clients and how a potential care event would play out. And you can see, where the concerns lie, when we look at this survey. So What I also like about this tool is discussing the plan, but more importantly, this finishes with a questionnaire, right? And one of the questions on the questionnaire is question number 5. Well, many people believe that Medicare or Medicaid will cover these costs, yet often long-term care becomes private pay for the families, $1 by one, right? So on the very first day, where is that money coming from? Which asset would you sell first? So that's a great question for you to really engage your clients. Now, some of you might come up and, you may have a disclosure letter that you've used to have your clients sign off on. Well, we've taken a little bit of a different approach with what we call our asset identifier. Again, this does not reference product at all. This strictly addresses and attacks what the plan is. So, Mr. and Mrs. Client, as part of your comprehensive financial plan, I want to discuss one of the biggest risks in retirement that might impact that comprehensive plan. More importantly, it might impact all the different components of that plan, from income to legacy planning to asset preservation, right? And that's the risk around an extended healthcare event. So what this allows you to do, and this is a completely fillable document, so you can put your business card up here on the left, right? You can customize your client's name in here. And then what you can do is you can reference any website or any source that you want for the cost of care. And you can hit the at-home care, the assisted living, and the nursing home care, right? Which is kind of your different levels of care that somebody might expect to have delivered. Now, it's important to note that my positioning for my advisors that I work with is, let's plan to stay at home. Tell me which of your clients actually wants to go into a facility. That is plan B. So the goal here is to really plan to at least cover the in-home health care and maybe the assisted living care at the very minimum. And that will, in short, provide you a hedge for the higher end costs, which could be that private nursing home. And that could run easily up to $120,000 to $140,000 a year. Now, again, Lincoln actually provides a client-approved website, whatcarecost.com, www.whatcarecost.com. Other people like to reference the Genworth site, right? But the reality is you can pull that information and use whatever source you want. And then it comes back to that question. Mr. and Mrs. Client, in the event that you had an emergency next week, next month, and with that emergency you needed some level of care, which asset would you liquidate or pull income from to pay for that care? So it's kind of like, here are what the potential cash flow needs could be in retirement. Which asset is going to generate that cash flow, and or might you liquidate to fund that cash flow need, right? So now you're in a position to document the asset. Now, if you're somebody on the phone who manages the money, this helps you expose if the asset is under management. So now you're in a position to protect your AUM and really protect that asset, because now you know that that's the first to go. If you're not managing money, this is a great tool to understand where that liquid asset is sitting and really position a way for your clients to get stronger leverage off of that asset. And then down here, we can have them sign off on this part of the plan. Right now you're self-funding. Let me show you a more efficient way to do that. And that's really where our strategy comes into play with MoneyGuard. And whether you're fully going to transfer the risk for what I might argue is the high-end cost of, say, a private nursing home, or if you want to hedge and really design a benefit that covers the in-home health care and covers maybe half of the nursing home, then some plan is better than no plan, right? The other thing that's really nice about this tool is, number one, you're not talking about product. So how many times can you go back to the well and present a client or product specific solution to a client? I'm going to argue 2, maybe 3 times max. With this tool and addressing this as a planning opportunity, this can be reviewed really at every annual planning meeting. Why wouldn't we? Mr. and Mrs. Client, has anything changed with your financial situation regarding the assets that we would liquidate first in relation to your self-funded plan in the event of an extended healthcare risk? This also helps you document the conversation, right? So definitely a key opportunity for you to take advantage of some consistency there. Now I want to go back real quick. And again, this is a 3-bucket story, but where is the market? So I talk about this a lot. Where is the market, Tim? Well, I've been spending a lot of time talking about our younger clients because that has been an area that has been exploding for us. Younger clients, between 40, 45 to 55 years old that, decide to fund over 10, maybe 15 years. But today, what I wanted to dive a little bit deeper on is a retiree that is really in a prime demographic, mid-60s, might not have the liquidity. But I wanted to tie in a sales idea that is really applicable to all these types of client profiles, especially those, would look at this from a flexible premium design. So what I want to talk about right now is a retiree. I call her Janine. And Janine is 65 years old. And I ran Janine, under Josh's profile. And I always love to use illustrations to kind of highlight, what we do at MoneyGuard, because I think there's a lot of things here that can help simplify what you bring to the table when you're having this story, these conversations and presenting the story, right? And my goal is to simplify things, right? Well, let's understand what this means high level. So with Janine, and what I reference as my 50-10 hedge strategy is let's come in and solve for about 50% of the risk and fund it over 10 plus years. So for Janine at 65 years old, she doesn't have the liquidity. She's going to have to take RMDs in about 5-6 years from now, right? So she's also healthy now. So we know that she can qualify based on her health. So what we do is we solve for a $4,000 monthly benefit. And I designed a 5-year benefit duration. Right off the bat, Janine has over $250,000 in a bucket for long-term care, day one, which is available at $48,000 annually at $4,000 a month. But one of the keys here for Janine is, one, we're adding a 3% compounding inflation option to this. So these benefits are going to grow at a compounding rate year over year. Two is we're going to fund this over 10 years, really as a starting point, because we want to show her ultimate flexibility. So that premium is $12,332 over a 10-year period of time. So it actually plays out to be about $123,000 roughly. Okay. Now we have a 0-day wait, so there's no deductible period. We begin paying claim as soon as she qualifies. We have a 70% return of premium, which, oh, by the way, nobody quits and walks away. If Janine is concerned with liquidity, we can design a 100% return of premium, but that does come at a pricing adjustment. But let's look at how this plays out, because I have some advisors that come to me and say, Tim, this is really where I sell this page, right? And sell this illustration. Now, you can see at the top, all values shown are guaranteed, right? As long as we fund these premiums as planned, Lincoln can never increase the premium and we can never decrease the benefits. So what does this look like? Janine's 65 now. She's healthy. Chances are she's going to live at least another 15, 20, maybe even 25 years. So let's take a look at age 85. At age 85, now Janine has available over $7,200 a month and $86,000 a year that would play out over a 5-year period of time. And as you can see, she has a bucket of long-term care close to $500,000, right? Yeah, I figured that would happen, right? So now Janine has essentially leveraged that $12,000 annually going into this, and she's creating this bucket of close to $500,000. And in fact, that grows to over $500,000 by the time Janine is 88 years old. So, and it will continue to grow, especially if Janine comes and says, yeah, mom and dad lived into their, mid to late 90s, maybe hundreds. So essentially what we're doing, just to recap here, we're committing about $123,000. We're going to fund that over a 10-year period of time. We're only looking to cover about half of the potential costs based on averages, but that half of the high-end average is going to cover our in-home health care and or a good chunk of our assisted living facility. And it's going to grow. And you know what? Janine might say, you know what? I'm taking care of mom and dad. Can you come back and design this for $6,000 or $8,000 a month? Now you're in the position to upsell the case, and you're doing your best to avoid any sticker shock. And at the very minimum, Janine is going to see her premium back, or should I say, Janine's family is going to see that premium back in the form of a tax-free death benefit. Now, a couple pivot points. Janine might have some questions, right? We have 2 key reports that are available to you. I'm going to go to the one that's a little more client-friendly first, and bear with me as I scroll through this. But number one, Janine might say, you know what? Do I get a pricing break if I fund this over 5 years? Well, for that same benefit design, Janine, we can have this fully funded by 70 years old and have this fully paid up for you. And, look at an outlay of about $106,000. So you have some premium savings, it'd be about $21,000 annually, right? If she just wanted to knock this out with a single premium, maybe there are some liquid assets that were coming due down the street at the bank that you just weren't aware of. You could dump in about $95,000 and just be done, one and done, and have a fully paid up policy immediately. But this shows you the flexibility on her options. Now, where this also comes into play, if Janine was 55 years old, this could show her funding this over 15 years. Or if Janine was 50 years old, this would show it funding over 20 years. So it essentially shows all your premium options. Now, Janine might come back and say, well, I've read about inflation and healthcare costs and long-term care planning. Is there any way for me to get a 5% inflation option or maybe a 4-year benefit duration? This tool really shows all your pivot points as far as all your plan design options. So, as we look at this strategy, one way to really look at this is as a hedge, as a healthcare hedge. And there's a lot of tools in here. And this is a nice report that kind of highlights the cost of care per the contract state. And it'll reference, all right, well, what are our costs of care at 65? Home health care is $43.68 a month, right? And it's going to grow at age 80 to $6,800 a month. Well, when you look at the benefits and how we design this down here, we're hitting that coverage. Now, it's not going to cover every dollar of a nursing home cost, but this is a starting point and an initiation to the overall engagement and that process of the planning. And I'll go back and I'll stop at this last report. A lot of people love our bucket. They say it simplifies our story. Look, Janine, one of 3 things that's going to happen. You're either going to need care and you're going to be able to tap on these long-term care benefits. And oh, by the way, at age 80, you're going to have about $400,000 in here. If you never need care, Lincoln's going to pass your assets on to your beneficiaries. And, you got this return of premium that you can quit and walk away. this three bucket strategy is very simple. When you look at clients' current strategy as far as their self-funded plan, how is this any different than what they're doing? So with that, it's Long-Term Care Awareness Month. Families will be at the kitchen table, the dining room table next week with their family members, whether it's seeing folks age, dealing with failing health, or just talking about planning in general. It's prime time to really engage with your clients and start initiating that process. So with that, I'll hand it over to Josh, see if there's any questions, but I'd encourage you to start talking to all your clients, age 40 and up. We can write all the way down to age 30, but your 40 and 50-year-olds, mom and dad are really at that clean time, right? They're at 75, 85 years old. They could be at potential risk of a health condition. So we're here to help. We're here to protect assets, protect lifestyle, and help identify and implement a plan.
All right. Awesome. Thank you, Tim. Some really, really good stuff. I love all the implementation stuff because oftentimes we don't get enough of that in these calls. So it looks like a couple questions here. We did have one request for that asset identifier. So for everybody on the call, we'll be reaching out to each and every one of you guys to check to see if you have any additional questions, and we will be happy to send you that asset identifier. I think that's an awesome tool and definitely very useful. So there's another question about the underwriting here. So maybe you could touch on that real quick, Tim. Just the question for everybody out there in the audience is, what is the underwriting like? So I think
absolutely.
You mentioned that.
Great question.
Yeah, go
Great question. Now, we streamline our underwriting process. Well, what does that mean? Is it simplified? Not really. It's streamlined. So what we do is we do a script check. So that's a prescription medication check and a MIB. From there, we do a phone interview. And that's it. We are not trying to get medical records unless you're in California. We reserve the right to get medical records. We don't want to get them. But across the country, with the exception of California, we do not want to get medical records. So we are doing a phone interview. The phone interview is pass or fail. We have historically approved over 83% of our business. Now, a lot of people ask the question, is the underwriting easier? I'd like to say that the process can be easier. And because we're built on a life insurance chassis where there's some mortality risk, that actually allows us some wiggle room on the overall underwriting itself. But we do offer a field underwriting tool that kind of really helps you be in position to uncover some of the big items that would create a postponement or B, a straight up declination. But we're going to approve or decline a case within about 5 to 7 days from the completion of a phone interview. And then we issue a policy. One other important note, we give you, the agent, the option of whether or not you want to go out and complete the medical history. And you might say, well, why would I want to do that? Or we really prefer to do that. That would shorten the phone interview if you collect that up front. Otherwise, you could say, Lincoln, I want you to collect the part 2 and the LTC supplement, essentially that health information. Great question.
Awesome. Yeah, that was good to give us an opportunity to touch on that, which I think is a selling point in itself there. So it looks like that's it for questions. So, except for the kudos to the presentation. So I'll give the credit to you, Tim, on that one. But if you guys have anything, that pops up after the call today, any additional questions, there's my extension again for Josh Horton and for Tim. You can see our direct extension to the whole annuity, long-term care, and life team. So if you hit that 66003, if you're not able to get a hold of me, you'll be able to speak to either Will Torrance, who's the other life and annuity sales director, or one of the other life directors that's available on call. And again, we really thank you guys for your time. We know it's a busy time of year for everybody, and being on these webinars takes you out of the field for a short while. But hopefully you found your time well spent. And as I mentioned, we'll reach out to everybody after the call. So any of those materials that Tim highlighted, we will happily send your way. And hopefully you might have some clients in mind, and we can work on some cases for you as well. So again, for Tim Lockwood, I'm Josh Horton. Thanks again, everybody, and go forth and prosper. Hopefully we'll speak to you real soon. Thanks again, Tim.
Thank you. Everybody have a great day.